fascinating to see what is happening on the commodity markets, and then this spilling through into currencies. So what is spilling into what? Is it the commodity slump that is spilling into currencies, or is it because of the currency volatility that is creating the commodity volatility?
The classic chicken and egg story, which comes first? Our view is very much that it's a currency driving commodities rather than the other way around. If you have a look at the range, for example, on the rand dollar, we're pretty much seeing the top end of that range. As you said earlier, an 8-week low against the dollar, so around the 690s, very much volatile, and of course the weakness, or should I say the strength in the dollar, is now driving the commodities, especially oil. We've seen oil very, very volatile over the last couple of weeks. Oil hit a high of about 118. That was yesterday, and against a low of about 109 in the last week. So it really is bouncing all over the show.
Exactly. I mean, we saw it hit not too long ago, a 32-month high of $127 a barrel. In the meantime, we've seen margin requirements being hiked on silver, on gold, on oil as well, to try and deal with some of the volatility. But when you look at the gold markets, it's so fascinating to note that the volatility is actually down. It hasn't actually increased dramatically. What do you think is going to happen going forward? It seems that all this uncertainty is prompting a lot of investors to jump into safe haven assets, and then you've got this geopolitical tension that is then pushing the oil price higher as well. Absolutely.
Quite an interesting question. In fact, another interesting fact is that we've seen Mexico recently buying up quite a lot in terms of dollar, or in terms of gold reserves, should I say.
Selling dollars, in fact.
And selling dollars. So while 1 week the dollar is the safe haven currency and the safe haven asset and country, the next week it's slightly weaker, and investors are piling into other investments for the yield pickup. What we have seen as well is we've seen a lot of FDI inflow into South Africa as an emerging market. So very much still the story from an investor point of view of a search for yield. Where are they going to get this yield pickup from? Is it commodities? Is it emerging market currencies? And so the significant factor to consider there as well, of course, then is what is happening with the rand in terms of its weakness or its strength. Jill Marcus earlier had a lot of questions on her speech in terms of where they see the rand and what do they consider to be a strong rand. She quietly or conveniently avoided quite a lot in terms of answering that question. But I think the takeaway that we can get from her speech is very much that the Reserve Bank will continue to support a slightly weaker rand. I don't think a weaker rand as far as the importers or the exporters would like to see in terms of an 880 level, I believe was indicated in one of the questions.
It's quite fascinating when sort of balancing it up, ensuring that you've got a local currency that is supporting the manufacturing sector, but also mitigating the intensive inflation scenario that is playing out on the oil front and the food front. And it seems that they've changed their rhetoric slightly, given the fact that Finance Minister Pravin Gordhan came out not too long ago saying that we're lucky that we have such a strong currency mitigating the inflation pressures.
We are indeed. In fact, again, let me go back to Jill's speech. So, you know, earlier on, she quoted quite a lot, or focused quite a lot on secondary round effects. Very hawkish, much more hawkish statement than the March MPC statement, which we were believing was going to happen. She focused quite a lot on indicators and drivers of inflation, as you say. So that being, of course, the unemployed, or the lack of growth leading into what we would assume to be a lower inflationary environment. But of course, then the commodities, the risk of a weaker rand, all forecasting, and of course the upward pressure on labour and wages, picking up into a slightly weaker inflation scenario. The other thing that one needs to consider, of course, is the consumer in this country is very much more now concerned about the commodities prices feeding into the petrol price. As an example, we've seen an 83 cents hike, cumulative hike recently in total. And of course, that's putting a lot of pressure on local consumers. Interestingly enough, reading in the paper the other day, in the Financial Times, US consumers are in fact now buying more and more online, rather than actually getting into their cars and driving to the local grocery store.
Exactly, it sort of goes with the International Energy Agency, which basically cuts its global demand forecast for oil as well. So it seems that we're becoming far more efficient in terms of the way we're living.
Just a comment on oil though. Although we have seen this bounce around in terms of the spot rates, and of course the concern is for a higher oil price going forward and upward pressure on that price feeding through, as I said, into the local diesel prices. Interestingly enough, though, consumers of oil or consumers who are exposed to diesel via the market can still actually risk manage their positions or hedge forward at a lower price in the future. The 1 year price going out is about around an $8 discount to current Brent crude oil prices. So still some opportunity therein, while the rest of the economic factors would point to potentially a higher oil price.
I'd like to touch on the local currency very quickly. I mean, we were very close to 7 Rand to the US dollar. We've now bounced back somewhat. Bond prices also being affected by the MPC rate decision. I mean, it seems that we are definitely pricing in, or the market at least, is pricing in an interest rate hike by the end of the year. Tell us about your Rand play at this point. What currency would you be playing it against, and at what level?
At the moment, we are re-looking at our currency forecasts. Our currency strategist, John Cairns, will be publishing something tomorrow. We are seeing a slightly stronger euro against the dollar. It has come back, indeed, and so against our original forecasts that we saw at the end of this year, we were forecasting a euro rand of around 940. We do see that being a little bit weaker then at this stage with a stronger euro view in mind.